Hope you're having a great day so far. Today is January 8th, Friday, and on this post I'll be telling you about the overall crypto markets really quickly before diving into NuCypher and Numerai, NU and NMRUSD, and see what exactly are going on in these two markets. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on these markets according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign up and a qualifying deposit, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculations, opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I will get to them a lot faster that way. Now, see what exactly is going on in this market first. Most importantly, I do like to take a look into Bitcoin dominance. Tells me where the money could be trending into, whether it be Bitcoin or altcoins. Currently on Bitcoin dominance, I am looking on the daily time frame because there could be a possible head and shoulders pattern that could be playing out or developing on the daily time frame here. So if this daily candle, which closes in about 40 minutes, actually closes at about the 71% level, I would be more inclined to think that this is a head and shoulders pattern that could still be developing. However, even if this head and shoulder does not fully develop, I would say there are still bearish signals on the daily and the 3-day time frame, which is basically if price action gets to about 72.5% or higher, even slightly higher, there's still possible bearish divergence on the daily time frame. And of course, the next time frame I'm looking into would be the 3-day time frame, but does not close for another day, but there could still be possible bearish divergence here. If these bearish signals actually play out, Bitcoin dominance is likely to continue downwards. And when Bitcoin dominance continues downwards, generally speaking, it is better trading opportunities for altcoins as opposed to if Bitcoin dominance trends upwards. Now, if Bitcoin dominance trends upwards and Bitcoin price action pulls back, as we have seen last night, this could take quite a bit of the altcoins down with it. So trading altcoins under these circumstances I just mentioned, I would take what I just said into consideration, at least personally. Now let's take a look into NuCypher first and see what exactly is going on in here. Since the last time I have spoken on NuCypher, I did mention that there was a falling wedge pattern that could be playing out. And right now I do see that the breakout of this falling wedge pattern has happened, okay? So this is my opinion of what is going on right now. Price action has actually broken on top of some of these key moving averages, as I have mentioned before the breakout of this falling wedge pattern. Now the falling wedge pattern measure target is about 37 cents, may or may not be reached. Could it also be overreached? Yes, but I just tend to be more on the conservative side. Now let's talk about some of those moving averages that I said could be resistances after the breakout of this falling wedge pattern, which includes previously a lot of the hourly simple moving averages, which the price action has actually broken back on top of and now are right back below it. I do see a possible double bottom pattern here on the hourly time frame. However, this is a conflicting signal with a possible head and shoulders pattern here. Okay, so let me draw that out real quick. So the head and shoulders pattern would be about the shoulder levels would be about 21 cents. Okay, one shoulder here, one here, and then on the right side right here. Okay. However, there is also a double bottom pattern right here that could also be playing out. So it depends on which of these patterns actually play out. I think that could actually shape the next day or so price action pretty differently, because let me give an example here. If this double bottom pattern actually plays out, this would actually invalidate this head and shoulders pattern. Okay, so this is what I mean. This double bottom pattern, the neckline of it is at about 21 cents. Okay, let's take a measure target of this double bottom pattern. The measure target is going to be about slightly under 24 cents. Okay, so that would actually get the price action more towards the breakout of that falling wedge pattern. Now, this is theoretical target only, may or may not be reached, may also be overreached, of course. That's what I'm looking at for the double bottom pattern. For the head and shoulders pattern, I would say the neckline would be at about, let's see if I can actually pull it down more and still get consensus of candles. I would say here is still fine. The neckline would be about 18.4 cents for the head and shoulders pattern. Let's say if the head and shoulders pattern actually plays out. That would give a measure target all the way back down to about 14 cents. Okay, that may or may not be reached as well. So I think this is at a pretty critical point for the price action right now. So what I'm looking for as a clue and seeing which of these patterns are more likely to play out is the neckline right here, which is pretty parallel with a lot of these shoulders on this head and shoulders pattern. Okay, so if we start getting hourly candle closes above 21 cents again, I'll be more inclined to believe that this double bottom pattern is going to play out instead of the head and shoulders pattern. Of course, to completely invalidate this head and shoulders pattern, I would like to see a hourly candle close at about the head level, about 23 cents on the hourly time frame. Let's also take a look into a higher time frame and see where exactly could be acting as resistance right now. I actually don't see any moving averages that's above the price action right now, at least big moving averages on the daily time frame up that could be acting as resistance right now. So yes, I think the resistance is coming from this fib level right here, about 22 cents. The 0.38 fib level, that's what I'm looking at as the hard resistance. Let's also take a look into the support right now. We have quite a bit of support that's right beneath the price action right now and the neckline of this head and shoulders pattern. So that could actually be where some of these supports could actually be where the price action may be bouncing, even if the price action breaks below this neckline of this head and shoulders pattern and this head and shoulders pattern actually plays out. Okay. So this is what I'm looking at. Let's take a look into the bullish and bearish case scenarios. I think bullish and bearish case scenarios, bullish case scenario here, very clear. I would like to see, first of all, an hourly candle close at least about, I would say about the head level right here, but that would actually, be way far above the, this, double bottom pattern here. So actually seeing a hourly candle close starting from the 21 cent level, as we have not seen any hourly candle closes for this double bottom pattern yet, I think that would be a good sign. For further confirmation, of course, I would like to see hourly candle closes about 23 cents that would invalidate this head and shoulders pattern. So let me reiterate the bullish pattern case scenario. First of all, let me see hourly candle closes above this neckline of this double bottom pattern. This would tell me that the likelihood of this double bottom pattern is more likely to play out, of course. However, if I get hourly candle closes at about 23 cents, that's even further confirmation that this head and shoulders pattern is going to be invalidated and that this double bottom pattern is playing out, of course. But that would be a very safe confirmation, of course, because it will be way towards the other end of the further end of this measured targets. Okay, so that's what I'm seeing. First of all, get hourly candle closes at about the 20 over this neckline of about 21 cents, and then further I'll be looking for another confirmation about hourly candle closes at about 23 cents or higher. That's what I'm looking at as the bullish case scenario. Bearish case scenario, if we start getting hourly candle closes below this neckline of about 18.3 cents, 18.35 cents here, that could mean to be very cautious then, because that could tell me that this head and shoulders pattern could be playing out, even though there's quite a bit of support that's right underneath the neckline right here. So I'll be more cautious then if we start getting hourly candle closes below 18.35 cents. Okay, these are my bullish and bearish case scenarios for NuCypher for right now. Let's take a look into NMR and see what exactly is going on. For Numerai here, let's take a look into the 3-day time frame, where I think it's more clearly illustrated that I see a double bottom pattern here. Actually, yes, it is a double bottom pattern here, but let me actually say this. There was bullish divergence here comparing this low with this low, as I am seeing a higher low on the RSI time frame. On the RSI, and then comparing with this way lower low on the RSI here. So that is bullish divergence that could be playing out right now. Price action has actually just gotten back on top of the 3-day 21 simple moving average, so that is a good sign. And if the price action can stay closed above this 3-day 21 simple moving average, that would be a good sign that this swing up could actually be this double bottom pattern playing out. Let's take a look into the weekly time frame, where it is a much more clear picture that this is a double bottom pattern here, where I do see the price action got rejected at the weekly 21 simple moving average that has actually just appeared this week. It's currently at about 30.75 cents, 30.8 cents, in that range. So that is the next key resistance here. The next key resistance, let me reiterate, will be the weekly 21 simple moving average. The key support here will be the 3-day 21 simple moving average. And this is the first time that the price action has actually attempted at the weekly 21 simple moving average. I think it's safe for me to actually assume that the price action does not break resistance, especially something very key like this on a larger time frame on the first attempt. That is a safe assumption. You guys let me know what you think. That's just my opinion as well. Let's take a look on the daily time frame, where we are actually right at the 50 simple moving average as well. So let's take a look into the bullish and bearish case scenarios here. Bullish case scenario for today, at least since we are actually closing in about 30 minutes for this daily candle, I would like to see that at least the price action here does not get a daily candle close below this daily 21 simple moving average at about 25.2 cents. Okay, so actually staying on top of this 25.2 cents, this daily 21 simple moving average would tell me the likelihood of tomorrow, where the 3-day candle closes, is more likely to actually close on top of this 3-day 21 simple moving average. Okay, breaking back on top of this 3-day 21 simple moving average and flipping this resistance into support. And so not breaking this support and turning back into resistance again would be a good sign that this swing and this double bottom pattern could actually be playing out right now. And of course, ideally, I would actually want to see a close above the weekly 21 simple moving average, but in my opinion, I don't think we're going to get that until next week. So that's what I'm seeing as the bullish case scenario. First of all, do not get daily candle closes below this daily 21 simple moving average, which is pretty close to the price action right now. And then for tomorrow's candle close, I would like to see a 3-day candle close above this 3-day 21 simple moving average. And then, of course, furthermore, I would like to see a weekly close above this 21 simple moving average here, and for the price action to continue towards the neckline of about $37 and possibly breaking out to the measure target. The measure target here is about $53.71. Measure target only, may or may not be reached, could also be overreached. Let's take a look into the bearish case scenario. Bearish case scenario, if price action starts closing on the daily time frame below this daily 21 simple moving average at about $25, that's going to look a lot more bearish because it tells me it's going to flip this 3-day 21 simple moving average back into resistance. Okay, and that would actually reverse any progress that this swing has done, and would tell me that this breakout will either be delayed for this double bottom pattern, or even further downward price action could be happening from here, which I think is less likely right now. So these are my bullish and bearish case scenarios for today for these two markets. Let me know if you guys found it helpful. Give me a thumbs up if you guys did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.